Weak breakout develop into a wide range in the end, but strong breakout would develop into narrow range or there's no range at all. So in this video, I'm going to show you how to tell whether the strong breakout would develop into a narrow range. So first, there will be a breakout, very strong, either one big bar or multiple consecutive bars together. And then after that, there should be a small pullback. And then there's a second leg, pullback, and a third leg. It depends on the strength of the trend. It could develop into the fourth leg, but normally 3 legs are very typical. After the third leg up, normally it develops into a small range or narrow range here. The reason it's narrow because it compares to the whole trend here. You can see the market doesn't go down too much. So in general, how to tell if this is a strong breakout develop into a narrow range? First, each leg here is very strong, and then you can measure how much each leg goes up to, and then they're relatively the same. Another thing is that there could be the second leg or the third leg is much larger than the first leg. That means the trend is getting even stronger when it develops. Another way is to tell by the pullback. The pullback should be very shallow or very weak. So that means the trend is very strong. Why do we want to tell whether it could develop into a narrow range or wide range or no range? That is because if you're swinging your trade, you want to know when to exit or where. So by telling that this is a very strong trend, you're expecting there will be a small pullback. So you want to hold your position even longer to see the exit. But if the legs and the pullbacks doesn't tell you that it's gonna be a strong trend, then the market will go down too much, then you will prepare to exit as quick as possible to keep your profit. Let's take a look at this example. Apparently, this is a very strong trend developing into a narrow range. First, there's a strong breakout with this big bull bar. This bar is huge. It's bigger than any of the bars before it. So this is a strong breakout. Then we use the pullback and the legs to tell whether the strong trend is continuing. First, here is a pullback. Even though this is also a bull bar, but it serves as a pullback, very shallow, small pullback. This happens when the trend is super strong. You won't see a bear bar as the pullback. And then if we go to the second pullback here, we can see 3 consecutive bear bars. But it doesn't go anywhere. It doesn't reverse the market too much. So this is a shallow pullback indicating the trend is still very strong. Then what about the legs? The first leg here, you can see very strong consecutive bull bars, big. And then after this small pullback, we can see the second leg here, consecutive bull bars again, even though smaller, but still very strong because it goes to the similar distance as the first leg. And then the third leg here. This third leg goes almost the same distance as the second leg and the first leg. This is also showing a very strong trend. Then next, you will expect when the market develops into the range for the end of the trend, this range will be narrow. So you want to make sure you exit at a very good level to take more profit. Let's do a comparison of the breakout developed into a wide range and the breakout developed into a narrow range. On the left side, you can see that this first leg is huge. Yeah. And then the second leg is smaller. Third leg is smaller. That's why it develops into a wide range. And also another way to tell is the pullback. You can see the pullback. This is small pullback with a doji bar. A big bear bar as the small pullback. These 2 small pullbacks forms the first pullback. This is the weakening of the trend. The same thing for the second pullback. There is a bear bar back and then a second small pullback within the second big pullback. So it's the indicator of the wide range in the end. So when you are at the top, so you want to close your position as soon as you see some sign that is going down. Otherwise, you can see the market goes down too much. So it's gonna eat your profit. Or maybe if you don't manage your trade well, you're gonna turn the winning trade into a losing trade. On the other hand, we can see when we compare these two trends, the pullback is small, lag is huge. That's why this range is relatively narrow. Let's use Fibonacci retracement to see how much the market reverse. We draw the line 0% and 100% and see each trend how much they go down to. Apparently we can see for the first trend, weak trend with a wide range, it goes back to touch the 50% level. But for the second strong leg here, after that it develops into a narrow range, it only reached back to 38%. Then how to trade? Where's the signals? This is the 10-minute chart. After the breakout, you want to observe for the pullback. After the pullback, the next bar is a huge, big bull bar serving as the signal bar because the body is accounting for over 60% of the candlestick. It leans towards the upside. That's why this is a very good signal bar. After the bar finishes, you want to pull your trigger to enter the market. If you didn't capture the first pullback here and enter the market, because sometimes it's really hard, there's no apparent pullback here, then you want to capture this pullback, the second pullback here. Or if you already in a trade but you want to add up your position to capture more profit, what you can do is that after these 3 consecutive bear bars, when you see this bull bar, it could serve as a signal bar because this is a strong trend. The stronger the trend, the less requirement on the signal. So you can use this as a signal bar, or if you are not sure, you wait for another bull bar here. 2 consecutive bull bars means the strength of the market. So you can use the second bull bar as the signal bar. Or even you want to wait for a perfect bull bar, this third bull bar can serve as the signal bar. But for the third bar, you may not be able to capture it because in this case, it's a relatively small signal bar, but it could be a huge bull bar. So that means when you wait for that bar finishes, the market is already at very high level. And another way is that you can adjust your time frame. So to lower time frame, you can see more details. So if we move to the 5-minute chart, you can definitely see that here is the breakout. And then what we want to do is that after this breakout, you can use the second bar here as the signal bar because this breakout seems to be very strong. And then the second bar here confirms the trend is going up because you can see the wick here is very small. It's going up. So right after this bar finishes, you can enter the market. Or even if you want to wait a little bit more to see consecutive bull bars here, and then here definitely you can see when the market slows down, this serves as the pullback. So after you see this bar with the top tail there, it can serve as the pullback. The next bar can serve as the signal bar, or even the next one, or even the next one. The similar concept as in the previous 10-minute chart. The same thing along the trend here. When the market pulls back here again with the hammer, it's a bear bar. And then the next bar is a bull bar. This bull bar can serve as a signal bar, enter the market. Or even then, any other pullbacks along the way, because you can definitely see this is a very tight channel. Tight channel is a super strong trend. It's similar to the breakout bars, like 2 consecutive big breakout bars. So that's why whenever there is a pullback here with the bear bar, the next bar, if it is a bull bar, you want to enter the market. Or even along the way, there's another very good signal bar, you want to enter the market. Or even if you can go down to even 2-minute chart or 1-minute chart to see more details. Because sometimes you want to display multiple time frames together at the same screen to see which one you want to trade. So in this case, in the 2-minute chart, we can see after the big breakout bar here, there is a pullback, very apparent with 2 consecutive bear bars. Right after that is another bull bar. So this bull bar can serve as the signal bar. you want to trade after it finishes. Along the way, when you see the pullback, you also want to trade. However, this is a 2-minute chart. In the very beginning of the trend, you can use 2-minute chart to trade, but after maybe 5, 10, 15 minutes, you want to switch to a higher time frame. Do not trade 2-minute charts all the time, because when it pulls back, it will get you a stop loss. One good thing for the strong trend is that, as I mentioned, the legs are very similar. So that means the second leg and the third leg could go the similar distance as the first leg. This can be leveraged to take your profit. How it works is like this. For this chart, you can use this huge bull bar as the distance, as the measure move. You measure from the bottom to the top and see how far the market goes. And then next, this bar means the market is not strong as the first breakout bar, so you want to measure from the bottom of this bull bar to upside to see how far the market can go. So probably if you enter the market after this, you want to take profit at this level. You can also see that there is a bull bar with a very big tail here. That means some other traders are using the same measure move to take profit. They want to get out of the market and keep their profit. And then when the market goes up again, you trade again for this pullback. After the pullback, you want to measure from the bottom of the pullback to the top with the same distance. So this is the level you want to take your profit. And you can see that right after it goes up to penetrate this level, the market goes down. That measure move technique works for the very strong trend.